Okay, what I want to do really quick, I just want to show you a quick pass through on some of the analysis we've been doing. So rather than break this down, or I'm going to do two, break them down and look at the operating memorandum and look at the full financial details. I just want to do a quick look at this 30 seconds, move on. 30 seconds, move on. Or you can do it if you're looking at these online. Or if you have a broker, tell them I want something in this region, this price range, this type of return, this type of lease type, and you just tell them what you want. They can look at things real quick and not just send you everything. So I'm just going to show you that, just a real quick pass through, and whether or not I might forward it to you, whether or not you should kind of look at it or just kind of delete it as you come across these. All right, so let's start. I don't want to take too long. I want this to be just a quick video. So you get an email, pop up the first page. Don't worry about downloading the operating memorandum unless you're like, this one sounds good. Price range, $1 million. That's actually really good for a commercial investment. Cap rate is net operating income divided into the purchase price. If you were paying all cash, that would be your return. That's not a bad return in this market. Lease type is triple net, which should mean, unless there's exclusions, that there's nothing you pay for. So whatever your gross income is also your net. And that's really good. That's better than if you're investing in houses and apartments, because you'll get your gross income. You'll have a lot of other expenses that you have to take care of for tenants. So triple net should be a good thing. Just look through these bullets real quick and you can make a quick decision. You'll have questions, but real quick, it tells you about the tenant. In this case, Heartland Dental, I'm not familiar with. It says it's a corporate tenant or a big tenant. Worth looking at if that is true. It says they're the largest in the US, so definitely worth looking at. Triple net lease, it says passive income, so if that's true, that's really good. Your rental increases are 10% after the first 5 years, so you won't get them every year, but it averages out to 2% a year. So you can decide if that's good or not for you. It's in the Houston area, which is a huge population, a very fast growing population. And they're talking about adding a lot of residences. It's the second fastest growing area in the nation. So excellent location. It says something here about Heartland Dental had acquired another practice there in 2020. That's also a good thing. I like this. I like the entry price. I like the cap rate. Certainly you might have to finance some of it if you can go in all cash. If you can have the owner carry some, that's better, because rates right now are not great. But anyway, I would send this over to you. If you had given me your criteria, I would forward this to you to look at. All right, let's look at one more real quick. Is this the one? Okay. This is, and I don't see very many of these. This is both a dental building and an IHOP restaurant. So not sure why that is. I guess they're selling them in a package. But anyway, again, real quick, you look at what type of asset type. You look at the location. Now, I don't know anything about North Augusta, South Carolina. So until I read this with you, I'm not going to know much about it. The price is $4.5 million. And if you've got a property you've sold, or you've got that kind of money you need to put in, this might fall within your price range. Again, each client that I'm working with will give me this ahead of time. I will ask those questions. If you're working with somebody else, I suggest you give them as much of your criteria and don't just tell them anywhere, anything. Be very specific so they can make this kind of quick pass and not waste your time sending you junk that you won't even look at. So price $4.5 million, cap rate, I like, it's over 7. Again, that's net operating income divided into the purchase price. Here's some of the highlights. Let's see what it tells us. You've got 15 years left on the IHOP lease. That's very good. You've got 5 years remaining with the dental. Now, I don't know Aspen Dental. It says corporate. Corporate could mean anybody got an LLC or an S Corp. Maybe they're big, maybe they're not. You check that out. 5 years might be the first term, and then they have several 2 or 3 5-year options. So they might actually go on up to 20 years. But what that means is they can opt out after 5 years. So something to consider. It talks about excellent road visibility in a retail corridor. corridor. 91,000, 123,000 residents. Nothing like what we just looked at in Houston. That might be okay for dental, might be okay for what you're looking for. If it supports this business and you don't rely on a higher volume, that might be okay. I don't know that I would care if it's a short distance to the Augusta National Golf Club. If it's dental, I mean, you need to care about the population in the area more than if there's a famous golf course. Okay, now all the golfers probably just hated on me. Sorry, Dave. Okay. Hopefully Dave will see this and then he'll laugh and not get mad. Okay, so great access from both Interstate 20 and 520. Look on a map, it's are those the major interstates? Then that's good. Limited landlord management responsibility is not very clear. This is a summary, not the detail. So is that the same as a triple net? It sounds like there might be some landlord responsibility. That might be the roof, that might be the parking lot. That doesn't sound like a lot, right? Unless there's a lawsuit in the parking lot, unless the roof caves in after a storm. So, you know, certainly something to look at. The triple net, I shouldn't say it's better. It's not better. It's preferred by a lot of investors. It's not good or bad. Just be aware of it in your overall cash flow model. And then it tells you what it's adjacent to. Obviously, most of us know Lowe's, Walmart, Kroger. So that's good. It's not in the middle of nowhere. So that's all. That's all I would do in my quick passes. Yay or nay, forward. If it's in your price range, great. If you're like, nope, I don't want a city with under two or an area with 200 within 5 miles that doesn't have a population of at least 200,000, I don't want it. I wouldn't even show this to you. So you can kind of see how I get to that quick pass. Hope you found this helpful.